Let's say you walk into a dining room and find everything on the ceiling. I mean, everything. Not only the tables and chairs, but also all the plates, silverware, napkins, and glassware. They're all there resting on the table and the table attached to the ceiling. What's going on? We might not know, we might not be sure, but one thing we can be pretty certain of, there are forces other than gravity at work. Now, I've heard from a lot of traders recently, past couple of days, past couple of weeks, that they're a bit disoriented, right? What worked well in April and May isn't working quite so well in June and July. Flexibility and adaptability are essential in trading. In today's state of the market, we're going to talk about how to stay in the game when you're disoriented. Now, for those of you who haven't spent much time with me before, I'm David Starr, Vice President of Quantitative Analysis here at Simpler Trading. Most of my professional life has revolved around using mathematical techniques to generate useful insight. I've been doing that full time in financial markets for over a decade. And during that time, there have been many changes to the trading environment. Look, sometimes those changes can be anticipated, sometimes they can't. And while it can be quite lucrative to correctly anticipate a dramatic change in market behavior, predicting those changes can be elusive. So while it's tempting to use this state of the market broadcast to make some broad pronouncement about what's coming next, I want to let you in on a little secret. It's far more important to be able to adapt to what actually is happening than go on about guesses about what's going to happen next. So to me, the market is telling me that there are forces other than gravity at work. Everything is, well, on the ceiling. And I want to walk you through not only how I came to that conclusion, but also how I have adapted to it. And in that, maybe a little bit about maybe what I see coming next. So the last time I was here doing one of these weekly State of the Market broadcasts for Simpler Trading, we were talking about why the markets were heading up in the face of deteriorating economic data and how that pushes us to use other tools to figure out where markets are going, not just earnings reports, economic releases, and those sorts of things. In particular, we talked about how I use Elliott Wave. Now, that was back on June 8th. And whether you're viewing this, I know we have folks viewing this on Facebook, some on YouTube. Both platforms have that recording. You can go back and look at the older sessions and review what we talked about. There's some good info there. And we're going to build on some of those ideas today. Now, let's come in and switch over to some charts, and let's actually bring those up full screen, right? And what I want to look at, among other things, is what let's just also get some drawing tools here so that we can point out some of these things. Look, that June 8th discussion, the last one, right? This was June 8th, and we talked about it after the market when we came up, and this is the S&P 500, when the S&P 500 was at then one of its, or what was at the time, the highest level since the March low. And I told you all at the time, you can go back and check this out as well, and this is one of the reasons why I'm saying it's important to focus on being flexible and adaptable, is I said, it looks to me like there's still some more upside. I don't know whether we're going all the way up to above the February highs, but it looks to me like some of this stuff has at least a little further to go. Now, the other thing that I said, and we've been marginally higher, right? Back here last Thursday, the S&P 500 was a little bit above where it was back in June, but not much. And here today, we're trading almost exactly where we were the last time I was here, just by coincidence, right? We just go through a regular rotation on the schedule. But between then and now, we had a pretty monstrous excursion to the downside, and one that you might not have wanted to sit through for a move this far up. So, aside from just talking about wanting to see or expecting to see the market higher in that June 8th broadcast, the other thing that we talked about is where that idea was wrong, right? That it was wrong back below this swing low, right? And probably right at this green line, we'll talk more about it later, but probably back below this level, which is right at around 3117 in the cash S&P 500. And so just a few days after that broadcast, when we had a huge gap down, right? Even then, hey, that day wasn't done. There was a lot more to go. And so that level, just knowing, hey, get me out if we're below here is really important. And so a big part of that ability to be flexible and adaptable is going to come from, right, knowing where is your idea wrong. If your trade setups or your market outlooks don't have an objective spot where you're wrong, then it's not all that useful, because you can't measure risk against reward, right? So look, that came in very handy. It saved me from basically months of not much to the upside and a lot to the downside. And there were some trades in there, but a decent number worked out. But look, this was not, right, the sort of place where you just wanted to be blindly long through all of that to get a little tiny bit of additional upside just right in this past week. So the first piece, right? Know where you're wrong. That's a key part of being adaptable. Now, the other piece that I've mentioned is this idea of being disoriented. The idea, right, of the table on the ceiling that we started off with. Where does that come from? Well, one of the ideas that I talked about again back on June 8th was Elliott Wave and the important lessons of Elliott Wave, which tells us that markets behave one way when they're going in the direction of trend, and another way when they're going with the trend. When they go in the direction of the trend, they tend to have a 1, 2, 3, 4, 5 wave structure. And knowing that, and seeing the size of this decline from the June high into the June low, someone who uses Elliott Wave as a tool might be looking for some additional downside after a bounce, right? Because this move looks like it was telling us that it was in the direction of trend. Well, if you're using that as a guide stick for what's normal, right? Just like you're using, right, the idea that if you drop something heavy, it lands on the floor, as your guide for gravity working and gravity acting normal. Well, heading down like this in a way that looks like a trend move and then getting back above that June high, as we've done recently, that's not exactly normal, right? Similarly, we had another move down, and right here in July. This also, and maybe you'll take my word for it, maybe if we have a little time towards the end, right? But if you take my word for it, this also looks like a trend move. And so one would expect that that we would eventually see further down without going back above the origin of the move down first. But of course, we ended back above that as well. So the thing that I'm looking for to make sense of the market isn't making sense of the market. Now, fortunately, we don't have to go to other techniques beyond Elliott Wave to make this make sense. Yeah, one of our Elliott Wave expectations, or the source of one of our expectations, that this looked like a trend move down, that this looked like a trend move down, but we ended up back above the start of each one. That one didn't come to pass, right? But there's another observation built in to this idea that trend moves and counter trend moves look different, right? So counter trend moves look like three-wave moves. So in other words, if this was the start of a downtrend, we would expect that any bounce, and bounces are natural after a trend move, but we'd expect that any bounce would go like this: up, down, up, a three-wave move, and then start to turn. And so it is generally good practice to wait for that bounce. Not only does it give you a better price, right, than say selling down here, but it gives you added confidence, right? If you see a bounce that looks like a three-wave move and starts to turn, right, comes down enough that it leaves it looking like a three-wave move, and I'll talk about that more in a little bit also. What is a move back down? How far? What is convincing? But if it does, then that gives you added confidence that the trend is down, right? If we get a trend move in the down direction, well, that means the trend is down. And if we get a counter trend move in the up direction, that also tells you the trend is down. Why? Well, if it's going counter trend, then it must be going in the opposite direction of the trend. And if it's headed upwards, then up must be the opposite direction of the trend. The trend must be down. So it gives us corroboration. And that is tremendously useful, because if you see this move down and you're thinking short and you say, but let me have this corroborated, well, then, right, if it never does, keeps going up, then you don't get hurt by being short, right? Same here, right? When this came down, I was looking for shorts, but I never got my entry on the bounce. And so even after, right, nearly 2 months, right, I didn't get hurt by those signals. And it comes from waiting for corroboration, right? And so, so Jen is asking, where are we going next? And that is a fantastic question, right? Remember, the premise of what we're talking about here is that things don't look normal, right? Things don't look normal. So predicting what's going to happen next, right? Well, that's kind of dangerous, right? If you were here at the beginning and you saw our picture of the dining room table on the ceiling, right? Yeah, everything's glued up there, right? And we're not sure why. Yeah, those glasses were on the table and they didn't have any water in them. And so then the question is, if you poured water in those glasses, would it stay? Right? Asking where the market's going to go next right now, right? When these signs are less clear than usual, is like asking, hey, if you've never seen, right, glasses, right, on the ceiling, what's going to happen if you fill them with water? Well, it's hard to say. And so a big part of that is waiting until you see something that's acting right again, right? So, and that is a critical piece of being adaptable, right? So what I'm looking at now is, once again, just like this move down here, and just like this move down here, to me, the move from last Thursday's high to last Friday's low looks like one of those trend moves, one of those 5-wave moves. So let's dig in and look at this on a 5-minute chart. And it goes down, up, down, up, down. A 5-wave move. And hopefully you can see this kind of parentheses Roman numeral 1, where I've labeled the first wave and the second wave and the third and the fourth and the fifth, right? But just like before, in order to help protect ourselves, we want to see corroboration. And again, what that will look like is seeing a 3-wave move to the upside that ends looking like a 3-wave move. And again, on short time frames, I think we've got that. So now there's going to be more to say here. So stick with me for a bit, right? When we have a leg up, a pullback, and another leg up, coming back below this high creates what we call wave overlap. It doesn't make it impossible for the move up to take on a trend-like appearance. It just makes it a lot less likely. Back below this low in the middle, that would make it really next to impossible. But this is a warning that this move looks corrective. And it's starting to give us the corroboration that I would be looking for. Now, as before, I told you guys, it's important to know where the idea is wrong. Well, the idea is wrong back above last Thursday's high, right? And one idea that is certainly not right is, even though this looks corrective, the correction isn't complete at this morning's swing high, because we've been above it in the afternoon. So if this is going to make sense, it's going to make sense as a different Elliott Wave corrective pattern. There are actually a number of them. And so while a lot of people talk about these corrective patterns being a 3-wave move, a lot of times they can be combinations of multiple 3-wave moves, 2 of them or 3 of them. So look, if this isn't a trend move up from Friday's low, and to me it doesn't look like one, right, then the best interpretation is that we're just in a bigger correction, a double correction, or a triple correction. Look, I'm glossing over a bunch of details in Elliott Wave. The good news is you don't necessarily need all those details to come in and figure something out based on what we're talking about here. If this leg up from this low around 11:30 Eastern today, right, roughly around 32.20 in the cash S&P 500. If we turn back down and take that out, then I think we've got another leg to the downside, and maybe more than one more leg, right? So, look, I'm not going to go out on a limb with what we're seeing in these markets about long-term what's next. Again, the signals seem far too equivocal for me to want to do anything based on it. But if we get that action, then certainly I think it's very likely we get that one more leg, at least one more leg, to below last Friday's low without getting back above last Thursday's high first. So last Thursday's high would be my stop. You could, if you're willing to give another try at re-entry, put a stop at wherever this bounce ends. But I would definitely be looking for at least that one more leg down if we end up back below this this swing low right around 32.20. An earlier entry, I showed you that green line before. That is a voodoo line, a voodoo tree line. We can talk about those in a minute. Right in here, let's see, what's the exact price? 32.29 and a half, roughly. This is a voodoo snow line. It's also an important level. Breaking below that would be an early warning for those who are, self-directed and able to use some short-term signals. I think that's heading down, right? So that's what I'm looking at short term, right? Longer term, we could be in a larger decline and we could not be, right? So lock some up if that triggers back below Friday's low, and then see if the rest will run. Right? That's what I'm looking at. And the one difference this time compared to this one or this one that's partially off screen, again, is that we're starting to see some early evidence of corroboration of this move down in the nature of the bounce. But I still need to see, before I'm going to enter, corroboration starting to be confirmed with an actual start through support. That is how we protect ourselves. And so, Jen, look, I can only tell you the setups that I see, right? And just to share this for the folks on the different streaming platforms, right? The comment says, seems pretty bullish to me. Higher highs and higher lows, and every dip was bought. Absolutely. The question is, how big is the dip and where does it end, right? That is the case at every turning point. So what did we have back here in February? Higher highs and every dip was bought, and then it did this. So what is your clue, right? Right? What is your clue that things are going to change? Or where, as I mentioned at the outset, you always have to have a sense of where your idea is wrong. So if you think that this is still bullish, where is your bullish idea wrong? Right? So, so the idea that I've talked to you about today, it could be wrong too. I just like trying it here, right? A whole lot better than I did here or back here. And we will see, first of all, does it even trigger? And if not, right, if not, well, if so, how far it goes. If not, look, I'm lost. And again, that is a fine place to be. It keeps you out of a bad trade, and you wait until your signals show you that things don't have you being lost, right? So that's in general what I'm looking at, right? We've got a really busy week, right? And lots of things can change the picture here. we've got the FOMC on Wednesday. Uh, we got a question to take a look at the NASDAQ, and I'll do that in a second. Look, on Thursday after the close, Facebook changed their report from Wednesday after the close to Thursday after the close. So we've got fully, 30% of the weighting in the NASDAQ 100 reporting after the close on Thursday. So we can look at anything we want in the charts, but it doesn't mean that it's going to tell us much, right? In the face of what might come in the reaction from Thursday. But in the NASDAQ, it's not as clear, right? In here, we had a sharp move down, looks like a trend move. We had what looks like a counter trend move up, and that yielded one more move in the direction of trend. Now, in the NAS, it's anybody's guess. What you can infer from this move down and this bounce has already occurred. We've already printed back below that level. Now it's all about, does this bounce end correctively? I would say if we can get a sharp move down back under a trend line up, right, from this low last week, or better yet, through some of these swings, then I would say, again, at least one more low, and perhaps decently below it, right? But the point is not to get hung up on figuring out what's going to happen next. The point is to pinpoint the places where we can have high probability trades, right? Because we're never going to be right all the time. And so also knowing where the idea is wrong, right? So Enigma, no, I don't trade harmonics, right? I do look at a decent amount of fib, but for the most part, I am just focusing on the patterns. And yeah, so for Kyle, in terms of how short term is short term, if I'm focusing on this short term, right now, probably just a couple of days, right? That is, if we've got a leg to the downside and a counter trend move up, then all this tells us is to look for one more leg. Now, it could be, an emphasis on could, based on the manner in which we've gotten up into this high. It could be that it goes decently beyond that. But by getting in here, we kind of get a free look, right? It comes down, we're already in, we've got a little bit of profit, and we can see with the remaining piece how far it might go, right? But I really don't want to look out much more than that. And then, as I said before, let the patterns show me the way. And so one of the other things that I mentioned, right, in that June 8th broadcast that I keep referring to, is I said, hey, look, this level is the level where the short-term bullishness is wrong, right? But stick with me, because I'm updating these ideas absolutely all the time, right? In the Simpler Futures room, right? One of the services from Simpler Trading, I'm updating these all day long, right? So if this triggers, I'm looking for just a level to here now, or to back below here. I'd like to see it roughly similar in length to this move down, or longer. Doesn't mean it has to be. That's what I'd like to see. Then what I'm looking at is those 5s and 3s. If we come down, up, down, and end up going right back up with just this, that's a 3-wave move to the downside. And it tells us that the trend is still up. And then maybe I can look upwards. But until then, even if the market is going higher, I don't have a trade to go higher. Yeah. So Jason's asking, do I think this coincides with a move higher in the dollar? Forex has not been. Forex continues to be pretty muted, and to me, it just doesn't seem to be like a fruitful way to look at stuff right now. So I'm pretty much exclusively looking at U.S. equities, right? Now, and also part of that, I totally missed the move in gold, right? I'd love to have gotten it, but I've missed it. That's the one other market that's moving, but that's run, right? So, any other questions? I think I've gotten through most of them. I know someone was wanting to take a look at Tesla. We are close to out of time, but we can take a quick look. Now, I don't do Elliott Wave work on individual stocks. I don't find it to be particularly reliable, but the voodoo lines are roughly based on Elliott Wave, and they are pretty reliable. The most important of those voodoo lines are the fire lines. All right, so we've got one down here at 957, one up here at 1439, which we're trying to hold. Right? So long as it holds, I'm going to focus on the upside, but I want a little bit of pullback if I'm going to look for more here in Tesla, because you can see we're right up here against one of these snow lines. So if we can get some pullback, hold some of these smaller levels, then I'll keep looking higher. But especially if we get only pullbacks here, holding above this 1439 level, which is pretty darn important. So that's a quick look in Tesla, folks. Thank you for spending a little bit of time with me. I hope to be back with you soon. We'll see how this all comes together in the coming days, whether the idea I've been looking at triggers long, whether this market over time starts to come back into some semblance of behaving like we expect, and if so, we'll talk about it next time I'm here on State of the Market. So thanks again for spending a little bit of time with me, and